late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today we're going to do a little update on Ethereum, take a look at it, kind of see. We're going to look at a few different metrics and see what's going on with Ethereum, kind of compare it to the prior cycles, and then see what we're looking at for the remainder of the cycles. So just flipping over here, we're going to take a look at intothecryptoverse.com here. So again, I've referenced this. You can come here, get a free tool or free account, use the tools, the data, get a better idea of what's going on in the markets. There is also, I think, a free trial option for the premium account where you'll get access to the whole suite of indicators and tools. So we're just looking right here. Essentially what we want to look at is the kind of the key risk levels of Ethereum in terms of its valuation here. So we see basically the current risk level in terms of its US dollar price. We're sitting at 0.431. So this scale goes up to a max of 1.0 being the highest possible risk, and then all the way down to 0 here being the lowest risk in terms of price. We also have that over here on our Bitcoin risk. So we also think about our altcoins or Ethereum. We have to value it in Bitcoin as well because we want our assets to outperform Bitcoin going forward, so that we can capitalize on that increased leveraged exposure, get more upside, and then ultimately looking to swap that Ethereum back into Bitcoin at a higher valuation, therefore increasing the Bitcoin valuation of our portfolios. So we essentially see over here Bitcoin risk looking very low right now in terms of Ethereum. We're at that 0.059 risk. So I'll show you on the charts here, we're pretty much at some pretty historic low levels or near them, which is why the risk is so low. And then you just see basically throughout the times throughout the cycle, as we get to more overheated times, you'll start to see that risk coming up. And when you start to see the Bitcoin risk reaching these elevated levels, it might be a signal to either swap that Ethereum back into Bitcoin, or if we're looking at, in terms of selling it into US dollars, looking at the elevated US dollar risk. So a lot of people, you might adopt kind of a dynamic DCA approach into the market based on risk. So one common theme is kind of DCAing in under that 0.4 risk target, and then kind of scaling your buys as the price drops to lower targets. So if we're looking at 0.4 risk, you're looking at $1,800 or about $1,800 Ethereum. So you might look to start acquiring some Ethereum right there. We see a 0.35 risk here, right in that 1545. So right between 1,500 and 1,600 is another pretty key level in Ethereum's chart I'm going to show you later. So we're going to pay attention to that as well. And then same thing, as it keeps dropping, you will just look to take advantage of that. So anywhere down to the 0.2 or 0.1 risk, we're still going to look to be acquiring Ethereum in that range. We'll just flip down here. We'll look at the color-coded risk metric. So we can kind of see basically every single bull market. It's kind of gone on these extensions here where we have the risk really elevated. So in 2016-17, we saw risk reaching that 0.8 kind of level on the peak. Same thing in through here on 2017, actually almost reaching that 1.0 risk. I think we did reach it in one of these peaks right through here. Yeah, right there. So we saw the full potential of the risk peaked there. We had a little bit of a retracement, and then we went to a new high here. So again, that elevated risk level. Same thing in through 2021, elevated risk levels before going into our bear market. So one noticeable difference this cycle so far is we haven't reached those elevated risk levels that we reached in the prior market cycles. So while we got well above 0.8 risk in the prior market cycles, we really only got to about 0.7, 0.75 risk this cycle so far. So definitely a little bit of diminishing returns so far. We will need to continue watching that going forward. We're also going to look at our time in the risk band. So this just shows you, the bulk of time that Ethereum spends trading is in this middle range right through here. That's where we see that 0.4 up to 0.7 risk. So what we're looking to is take advantage of the opportunities. So right when you see here, the lower risk we go, the less time that Ethereum spends in these levels. So you really need to take advantage of it when it does go to those levels. That's why when I talk about dynamic DCAing, we save more of our money for our lower targets because we're able to take better advantage of that, lower our cost basis even more, and then amplify the returns to the upside. So while you might start DCAing kind of in that 0.3 to 0.4 risk level, you're probably going to want to look to potentially, either you want to make sure you've got confirmation of that trend to the upside, in which case you can deploy a little bit heavier. But if we're in a downtrend and we're in this risk band right here, there's no confirmation of that trend change yet. Ultimately, just waiting for these lower targets might be the better opportunity. And then if we do get that confirmation of that change in trend, then you adjust your stance. You have to buy into the market. You might be buying a little bit higher than you are today, but you're going to be buying with less risk. So that's the thing I really want to focus on, is the risk adjusted entries into these positions. You could buy into it starting right now in the 0.4 to 0.5 risk, but also recognizing that it does spend a lot of time in these risk bands. So, we could just be due to come back. And if we get opportunities in these lower risk bands, that's where we want to DCA in. And then same thing to the upside. When we get to these risk bands over here, so 0.7 up to 1.0, that's going to be where you're looking to take profits in Ethereum. Looking here, just visualize it a little bit better as well, so we can kind of see all the different risk levels. So looking here, we see that 0.4 risk starting at 1.8K roughly on Ethereum, coming down to about $1,000 for the 0.2 risk. So looking between 0.2 and 0.4 as a potential accumulation range for Ethereum. We're going to come over here. We'll take a look at some of the specific metrics kind of to Ethereum here. So we see the supply essentially kind of slowly going up. So Ethereum is inflationary right now. Ideally with the merge, the idea was that if it has enough usage that it's burning, essentially they're burning gas, and then that's causing kind of a deflationary pressure on the asset. But right now we are inflationary, so we just see right through here the supply burnt all time is going up and down. But since the merge, we can see basically, supply is below that, the supply burnt is below that of the pre-merge levels, so not a lot of usage of Ethereum. We saw here this big burn, so a lot of people using it, basically everyone anticipating Ethereum to just go on this extended bull run from here. It didn't really play out, and we ultimately just bled to lower levels at the end of the day. We see here our issuance is curling up in that uptrend, and we also see our yearly inflation rate also ticking up here. So basically it just says that, Ethereum's not getting a ton of use right now, so not attracting that same level of attention, same level of liquidity that it did in the last cycle. We'll flip over to the Ethereum spot ETFs here. So we do follow the Bitcoin ETFs quite closely. There are spot Ethereum ETFs. They're a little bit newer and they're not quite as successful. So we see right here the actual total net flows of US dollars into these funds is minus $12.5 million. So basically they've had more selling of these funds than they have had buying. Same thing in terms of overall net flows of Ethereum. It is minus 6.07 thousand Ethereum for the total. So the ETF's not kind of doing what a lot of people were hoping, that it would just take off. We saw Bitcoin price really skyrocketing after the launch of the ETFs. That being said, we don't have the same level of interest in Ethereum. I think the major thing is that these ETFs don't offer staking. I've talked about that previously. We do have a lot of companies that are requesting staking in their ETFs, so we'll see if that's an advancement going forward. That would be very bullish. I think it would attract more institutional investment who are looking to not only capitalize on the price appreciation of the asset, but also the staking yield itself, because you can earn about 3 to 4% in interest. So if you have an asset that's really low value currently, expected to increase, expected for that network adoption to increase, as well as that 3 to 4% yield on kind of a staked asset, then it does present additional opportunities for people looking for that passive income, that yield earning strategy, in addition to the price appreciation. That being said, though, right now the ETFs, just not a lot of love for them. I think that based on what they have right now, without staking, there's no reason for the investors to take additional risk in Ethereum outside of Bitcoin. They're better off just going into the Bitcoin ETFs. We've seen a lot more success from those and continue to see that success. We're starting to see flows kind of come back into into Bitcoin, not in Ethereum yet. So we're still waiting for that. Maybe we'll get a bullish advancement development in terms of that staking feature for the ETFs, in which case I could see some renewed strength from Ethereum. We're going to take a look at the chart now, though, take a look at a bunch of different indicators. So we're going to first take a look at our RSI. We'll take a look at them all together, kind of get a good idea. So basically, RSI, we had our peak kind of here, and then we had our bear market low in this deep oversold red territory. Same thing over here. We have our peak up here, and then we've got our deep oversold territory, and then we also had our peak right here. So what we're waiting for is just that deep oversold red territory where we can kind of really convince ourselves that we've come into a potential bottom. You can see on the MACD, basically, we had our bearish cross. So right there, that bearish cross that I talk about of the moving averages, same thing that we had over here, and then same thing that we had right here. So we had, similar to the last cycle, two peaks, two bearish crosses. This cycle was a little bit different. We only had the one extension of the MACD. RSI, we had our bearish cross, bearish crosses all through here. So you really recognize the similarities here in the cycles, especially these two cycles here. We've got two tops for the RSI MACD, and then we have those bearish crosses. Another thing we want to pay attention to is our DMI. So just looking right through here, essentially where we are right now, you see that orange DMI minus line is on top. We've got the red ADX line curling up towards it, and then we've got the blue line underneath it. So if we look back to our prior bear market kind of lows, as well as, so you can kind of see, I'll pull up just the chart here and get a better idea so we can look. Just see here, essentially we had these downtrends. So every single market cycle, we saw this downtrend here. Price, as soon as it was able to break out of the downtrend, that's when we went in our bottom consolidation phase, really building out the lows there. You can kind of see, even though we did break out, we still bled to new lows, but we were able to kind of hold this, reverse from there, and then you see right in here, we had that bullish cross of the two moving averages. So alternatively to the bearish crosses that we had back here, we get a bullish cross here. We're in that uptrend structure with our higher highs, higher lows. We're supported by our momentum indicators, and we're entering the market and then ready to ride that trend to the upside. Similar thing that we saw over here. We had our downtrend, we broke out, we were actually able to hold these lows on the breakout, put in that higher low. We had the confirmed bullish cross of the moving averages. We saw a decent uptick in volume, and then when you look at the momentum indicators, how they looked, right around there, it was nice and bottomed, ready to make that move to the upside. So we'll pull those back up to get a better idea. So you can see right where we broke out of here, that was when we entered that deep oversold territory. Same thing right here. When we entered the break, or when we broke out of this downtrend, we were in that deep oversold territory. We had already experienced a bullish cross of the MACD. So you can see that right here. And then you can also see we had the bullish cross of the MACD right here. Also just right around that breakout time. DMI looking kind of similar here, where we've got the minus line on top, we've got the ADX line underneath, and we've got that blue DMI positive line kind of underneath. Waiting for that blue line to really get above both of these other two lines is going to really be a good signal for that momentum, where we might be more convinced that a bottom is in. Same thing that we saw over here. We saw essentially, we see our orange on top of our blue and red. We want to see that blue line really getting above there for that momentum. So kind of all the way through here, in that downtrend momentum, right through here, we saw that blue DMI line break above the orange line. That was our breakout move, and then we also came from that oversold territory, so there is decent opportunity for that to be a potential low. Looking at our big money buy indicators, you can also see that we did have two gold bars flash right here on this range. So it basically just tells you big money was accumulating this on the high time frame in this area right here. The same thing that we saw over here. So we saw one gold bar flash here and then another gold bar flash over here. This was essentially just a big, it looks like a bit of a range. It might be a bigger range if we zoom in, but we can kind of see, just through this bear market, that's where the accumulation was done for that inevitable upside in the next bull market. So we're also looking right now we haven't had a similar signal flash here on that indicator. We still looks like our MACD could come down a little bit more before bottoming out. RSI needs to come down to that more oversold territory, and then we also want to see that DMI positive line kind of starting to converge towards the negative line and gaining some bullish momentum. And then, so the last thing we're going to look at is our Bitcoin pair strength indicator. So this is an indicator from Precision Crypto Trading. I'll link their channel. You know, they're great guys, definitely useful information. Go check them out. They did provide me this indicator, as well as anyone in the community that wants access to it. Just let me know and I'll get you in contact with them and we'll get that sorted out. But we can just see, basically we haven't really had the same kind of bull market that we had in the prior two cycles. So 2017, 2018, you can see we had all these green dots signaling kind of 52-week highs in terms of their Bitcoin pairs, and then we kind of saw just a nice little bull market through here. 2021, 2022, we saw an extended bull market right through here, also with those 52-week highs kind of signaling there. And then this cycle so far, we haven't really had anything like that. You can see no green dots this cycle, only just a couple small instances where the Bitcoin pair strength indicator was able to flip green, ultimately just trending down. It is kind of interesting to note that we did have this down sloping trend line lining up with all the peaks. That being said, we want to see some strength from Ethereum here, but for now it is at historic lows, so while it could offer decent opportunities, that being said, you know, things can always bleed lower and we need to take a look at the charts, see what they're saying. So we're going to look right here. Taking a good cycle-to-cycle look at Ethereum, we can essentially see every single cycle we go on these bull runs and then we come back to these retracements. So pulling the Fibonacci level from the low of the cycle to the high, we can see that we came down just underneath our 786 and our 1.0 Fibonacci in the cycle here in 2017 before finding that low, reversing that structure to the upside, and then kind of going on from there to our kind of next bull run. And then same thing from here. Here we take our low to high of the bull market, coming back, bottoming just around that 786 Fibonacci level again, and then getting our breakout uptrend structure and then off to the races. So we're looking here at a similar level. You know, if we were to have that similar retracement back to that 786, you're looking at about 1565 as that level, 1575. So looking at a potential area of accumulation for Ethereum. We also see, you know, there's this liquidity pool right down here. So if I mark that, we can kind of take a look. You know, I would say if you're looking to accumulate Ethereum, you know, anywhere from this 850 range up to that 1580 range is going to be a decent opportunity to acquire Ethereum. If history rhymes and we're able to bottom at a similar level, then that 786 is going to offer good support. Otherwise, if we do return to these lower targets, so if we go to about, you know, between $800 and $1,200 for Ethereum, that's going to be a really good buying opportunity in my opinion, assuming that the markets aren't just in a free fall and likely to continue down. So watching this whole zone right through here as a potential accumulation on the high time frame. We'll take a look at the lower time frame now to try and get a better idea of what's going on. We'll see here. So essentially what we have is we're just stuck in this downtrend. You can kind of see we printed a bear flag here, broke down, bear flag, trying to get out of it, but ultimately breaking down, another bear flag, breaking down. And what we're in right now is also still a bear flag. So the most bullish thing we can do is price action like this, where we continue these higher highs and lows on the 4-hour, and then hopefully those eventually start to translate to the higher time frame like the daily chart here. We need to see that confirmation on the daily before we're able to kind of assume that the trend might likely change. We can kind of take a look at our different indicators. I'll just get rid of some drawings here. So we see some decent buying on the daily here in terms of the whale buy indicator. You know, deeply oversold on the daily for the RSI. MACD also oversold with that bullish cross, but looks like it's losing a little bit of momentum. And the DMI showing a kind of neutral-ish momentum, but the bullish momentum building a little bit here with the positive line kind of curling up towards that negative line. So we need to continue watching that, but ultimately what I'm looking for is that change of trend, or I want to see, you know, either we're going to revisit those lower targets and then look to accumulate Ethereum in there. So we kind of just look, we're just in this downtrend structure. We're stuck under heavy support, or sorry, under heavy resistance. Basically, you can see we've got all this horizontal resistance now all through here. Looking at that, so we'll flip that to red. We've got horizontal resistance. We've got our 50-day moving average curling down here. We've got this downsloping trend line. We've got all this VRVP point of control right through here. And we're just in that downtrend structure. So for now, Ethereum remains in a downtrend. We need to see that break, so multiple higher highs and higher lows. If we see something like this play out, where we have one higher high, we get another higher high, another higher low, you know, even I might wait for something like this to play and then getting in on the retest in here. So what I expect to see is when we kind of come out, we have those confirmed higher highs, higher lows, breaking out, coming back testing this level right through here, and then springing up from there, potentially attacking some of these higher targets up there. Waiting for that breakout move, that confirmation. Other than that, we can flip over to the Bitcoin, Ethereum Bitcoin chart here, because this is another decent thing that we want to pay attention to. Looking at some different things here. So basically, we see the prior cycle, we had this huge uptick in volume. Basically, you can see no volume like that this cycle so far. So massive demand for Ethereum right in here. You know, we might see that increased in demand for Ethereum if we get that ETF staking that I talked about, but you can kind of see downtrend, basically stuck under this, stuck under our moving averages. You see right here, we were able to bounce. We put in our first higher low, we put in a higher high, we had our bullish cross of the moving averages. You see we put in our next higher low. That is now a confirmed uptrend on the weekly chart for Ethereum. We see that basically based on those momentum indicators coming from drastically oversold territory, bullish momentum on the DMI. So looking pretty good there in terms of Bitcoin Ethereum. So that was a good signal that the low was likely in here, and then we did get that confirmation of trend to the upside with those higher highs, higher lows. You know, entering there and then off to the races. We saw it topping out between the 786 and 618 Fibonacci resistance from the prior cycle high. So if we pull the same kind of levels we take from our cycle high to our cycle low currently, this is where the 618 to 786 Fibonacci lies, right in through here. We're in oversold nature in terms of the RSI and MACD, and then we are seeing that the bearish momentum of the DMI is starting to lose a little bit of steam here, crossing below that ADX line. So just looking here, a couple things that I'm watching for. Either we're going to continue breaking down. If we do, then we have support kind of down at these levels right through here. So a little bit of support in there, looking at potentially accumulating kind of that ETH Bitcoin trade in this zone right through here if we are to break to those lower targets. Alternatively, if the more bullish case, markets get a bounce, you know, we put in that higher high, higher low, another higher high, subsequent higher low, and then look for that entry in that position right through around here, and then riding that up to our resistance zone there. Otherwise, we are in that downtrend. We could just continue, in which case look for this target zone down here, offering really good opportunities for Ethereum. You know, even looking, you might have a stop loss. If you're going to enter here on this play, then this price action is playing out, then we're going to have our stop loss below this low right here. Alternatively, if we reach these lower targets down here, putting your stop loss somewhere below that support zone just to prevent you from losing that position. But that's kind of all I have for today. If you like the content, if you learned something new, please like, share, subscribe. It all means the world to me, and I'll see you guys in the next one.